Thank you so much, Bill, for that excessively kind introduction. I also want to thank Hope Enterprise Corporation for inviting me to speak, and Mississippi Valley State University for hosting us here on their lovely campus. It's a great pleasure to visit the Mississippi Delta, the region that gave America the priceless musical heritage of the blues. This is also the site of some of the watershed events of the civil rights movement. But the Delta, like many rural areas, has long confronted the challenge of poverty. And today I'll speak about 3 areas of opportunity for addressing challenges of rural poverty: education and workforce development, entrepreneurship and small business development, as well as access to financial services, the principal topic of this conference. MVSU's mission, providing young people an affordable college education, is itself a very powerful anti-poverty program. For its graduates, of course, but also for other communities that are touched by the university. MVSU opened its doors in 1950 as Mississippi Vocational College. The vocation of every member of the first class of 200 students was teaching. And even as the university added other programs and became a full-fledged university, MVSU has continued to train many of the teachers who enrich, inspire, and spark the imagination of children who grow up here in the Delta. MVSU and other historically black colleges and universities play a crucial role in their communities. For much of the 20th century, HBCUs were the primary means for black men and women to obtain the education needed for middle-class or professional jobs. Larger percentages of HBCU students, compared with students at predominantly white institutions, come from lower-income families and are the first in their families to attend college. This university and other HBCUs support intellectual leadership, creativity, and innovation. And I want to honor you for this proud history and for your continuing commitment to a better future for your students and for the region where many of your students were born and will build their lives and raise their families. Today, data at the national level show a strong economy. Unemployment is near a half-century low, and economic output is growing at a solid pace. But we know that prosperity has not been felt as much in some areas, including many rural places. The Federal Reserve can help by carrying out our monetary policy mission of supporting maximum employment and stable prices. We also support strong communities by conducting research, promoting community development, and enforcing laws like the Community Reinvestment Act, which helps ensure that people have access to financial services wherever they live. We not only work with communities, we are in communities through the presence of our 12 reserve banks. Poverty remains a challenge in many rural communities. Indeed, 70% of the 473 persistent poverty counties in the United States are rural. Unemployment and mortality rates remain high in these communities. Along with lower incomes and wealth, the rate of business startups in these areas is lower, and their residents have less access to financial services. Many of these disparities have existed for generations, and in some places have roots in a history of discrimination. These areas also generally lack diverse industries and employment options and have often suffered from a decline in a traditional industry. In Appalachia, for example, timber, coal mining, tobacco, and textiles have long been in decline. Likewise, the number of jobs in agriculture and low-skilled manufacturing, mainstays of the Delta's economy, is decreasing as a result of automation and outsourcing. Turning to education and workforce development. High-quality education and training play a crucial role in extending opportunity in rural areas, starting with early childhood education. But in many rural communities, access to high-quality preschool education is limited. Mississippi is one of several mostly rural states where nearly half of residents lack access to good quality childcare, which is the main source of early childhood education. Many decades of research also confirm that children who grow up in areas with better K-12 schools or in classes with higher quality teachers have better outcomes in life. Later in life, workforce training and education are most effective when they train workers in skills needed by local employers. Rural areas where traditional industries are declining and where new employers may be moving in often experience a mismatch between the skills of local workers and those demanded by the new employers. Training and retraining programs tend to be centralized and concentrated in areas with higher population density, which puts many rural areas at a disadvantage. Education, of course, benefits both the student and the community, and it is true that some young people leave their hometowns to seek greater opportunity. However, it's also true that young families drawn back home by family and social ties are the largest source of in-migration in many rural communities. Young families are more likely to come back if they believe their children will get a good education. Returnees often bring back important skills and experiences and make meaningful contributions to the local economy. An excellent example of this is Tim Lampkin, an MVSU graduate. Tim grew up and graduated from high school in Clarksdale. After graduating from MVSU, he moved to Mobile for work. He wasn't gone long, though, before he felt called to return back to make his home here in the Delta. And since moving back, Tim has founded several businesses, as well as a nonprofit that helps people of color start and grow their own businesses. Turning to entrepreneurship and small business development, as with Tim and his clients, entrepreneurship opportunities can motivate residents who have left rural communities to return home, or to keep them from moving away in the first place. Business ownership represents an important source of income and wealth for both owners and their employees. Recognizing this fact, successful communities find ways to help residents turn what they know and do best, including skills they may have gained from industries in decline, into profitable small businesses. One example of a community taking this approach is Clarksdale, Mississippi. About 10 years ago, civic and business leaders assessed what made Clarksdale special and how those characteristics could help the community thrive. Since Clarksdale calls itself the home of the blues, attracting tourists using the local blues culture seemed promising. Over the years, Clarksdale has created new jobs by investing to improve its downtown and has supported local businesses that cater to tourists interested in the community's musical heritage. This growth is also creating new businesses not directly related to tourism, businesses such as urgent and primary care of Clarksdale. Dr. Mary Williams opened her urgent care facility last spring, partly in response to the closure of nearby Quitman County Hospital. Dr. Williams worked with local organizations to develop a business plan and obtain the financing needed to open a business that is critical to the community. DeWitt, Arkansas is another rural community where entrepreneurship is sparking a local revival. DeWitt is a town of about 3,000 people. Like Itabena and many small towns, it has seen a steady decline in population over the last few decades. The economy there is a mix of manufacturing and agriculture, and many families have farmed the land for generations, such as the family of Tammy and Troy Hornbeck. The Hornbecks grew up in DeWitt, starting and eventually selling a successful business built on a new soybean varietal that grows well in the South. More recently, they've been helping lead a new industry in their community using waste vegetable oil from local restaurants and oil pressed from camelina, a crop farmers are beginning to grow locally. This cooperative effort involves a partnership between a community college, a university, the local government, farmers and restaurants, and a community development financial institution, CDFI, among others. While still in the early stages, it has led to the creation of several new businesses and imbued the town with a new sense of what is possible. Entrepreneurs such as the Hornbecks and Dr. Williams need support to succeed, the kind of support HBCUs and other institutions of higher education have long provided. MVSU itself is supporting rural minority entrepreneurs through its participation in the HBCU Entrepreneurial Ecosystem Initiative, which teaches students how to start and grow a business. But inspiring stories like these are not as common as they could be. Entrepreneurship has the potential to play a greater role in poor rural areas, particularly in areas whose residents are predominantly Black and other people of color. Recent surveys have found relatively high levels of interest in owning businesses among young people of color. Indeed, nationwide, Black women represent one of the fastest growing groups of entrepreneurs. Yet research by the Federal Reserve suggests people of color experience greater challenges in gaining access to credit to start or expand businesses, which leads me to my last topic and the focus of this forum, access to financial services. Access to safe and affordable financial services is vital, especially among families with limited wealth, whether they're looking to invest in education, start a business, or simply manage the ups and downs of life. Family income and savings represent the largest source of funding for students' education. However, more than half of students or their families also borrow to finance their studies. And racial wealth disparities make black students more likely than white students to borrow for their education. Similarly, racial wealth disparities mean access to credit is critical for would-be entrepreneurs, who must borrow to supplement personal savings and support from friends and family. Banks often consider credit scores when evaluating loan requests, however, and high poverty regions tend to have a larger percentage of people with no established credit rating or with a low credit score. This combination of low wealth and low credit scores limits access to credit or causes borrowers to turn to higher cost sources of credit. Fortunately, CDFIs are helping potential borrowers improve their creditworthiness and providing them with safe and affordable credit. While CDFIs fill a critical gap in some communities, most consumers use other banks and credit unions. In rural areas, this often means a community bank. Industry consolidation has led to a long-term decline in the number of community banks. While most rural communities continue to be relatively well-served, that is less often the case with high poverty rates communities. So in 2018, Federal Reserve staff members met with rurals in rural areas across the country that had recently experienced a bank branch closure. We found that small businesses, older people, and people with limited access to transportation were the most affected. We also learned that the loss of the branch often meant more than the loss of access to financial services. It also meant the loss of financial advice, local civic leadership, and an institution that brought needed customers to nearby businesses. Regulation and supervision need to be carefully tailored to suit the size and business model of different types of institutions. At the Fed, we have renewed our efforts to avoid unnecessary regulatory burden on community banks, which provide essential credit in their local communities. Another means to address the issue of branch closures is the Community Reinvestment Act, CRA, which encourages banks to help meet the credit needs of the communities they're chartered to serve. The CRA has been an important tool for strengthening local communities. The trend toward fewer branches and increased use of technology to deliver financial services presents a particular challenge to our current approach to CRA evaluations. Specifically, the current regulations use a bank's branches to define its assessment area, the area for which it is evaluated for CRA purposes. To the extent that banks serve much broader areas using online or other non-branch delivery systems, or have so many assessment areas that examiners can't do a thorough evaluation in each, the financial needs of many rural communities may be overlooked. So we believe that revisions to the CRA's implementing regulations should more effectively encourage banks to seek opportunities in underserved areas. To wrap up and summarize my main points today, people in rural communities who are struggling with persistent poverty need access to high-quality education from preschool through college. They need support for their aspirations to own their own businesses, and they need access to safe and affordable credit. So I'll conclude with where I began, by applauding both MVSU and HOPE for their long-standing contribution toward bettering the lives of the people of Itabena and similar rural communities. Thanks very much. It's a great honor to be here today. Thank you. Thanks very much.
I think a mic is coming my way, but I think you can hear me. The chairman has agreed to generously take a few questions. If you'd raise your hand, we'll bring a mic to you. Anyone who'd like to ask a question? One in the back.
There you
We're
go.
good? Chidozie, Walton Enterprises, thanks so much for being with us today. I think often as you talk to folks in the financial community about financial activity and the communities we're talking about, there's the ex-ante assumption of deficit mentality, right? i.e., if you tell me to lend in this area, let me start thinking about how much money I'm going to lose. From your perspective at the macro level, right, and thinking about the overall economy, can you talk about some ways in which we might change this thinking, maybe by talking about benefits to the economy of unlocking economic activity in some of these places? You know, if you think about growth as population plus productivity, right, bringing larger swaths of the population into the economic picture is one of the ways to drive that. So help me understand whether from a tools perspective, a research perspective, a regulatory perspective, how you think about changing some of that deficit thinking. Thanks.
Great, thank you. You know, just from a macroeconomic standpoint, what you express is exactly the way I think of it and we think of it. And that is, you know, essentially economic growth consists of growth in the workforce plus growth in productivity. We say we're close to maximum employment, and at the national level we are, but there are pockets of regions and demographics all over the country who are not at maximum employment. So the obvious way to grow the size of the economy is to bring people into the economy who are at the edges. We have very low labor force participation compared to other advanced economies around the world. So it seems like that's the first thing you would do, is try to make it easier for people to get into the labor force, stay in the labor force, and it's, you know, kind of an important way to grow the economy. In terms of the decisions of individual financial institutions, they're profit-making institutions, and you know, they have to make their decisions. But I think from a national policy perspective, the focus on increasing labor force participation and getting more and more Americans into the productive part of into the labor force and into productive activities is it should be a high priority, and it's one that we consider in our policies.
Mr. Chairman, good to see you again. So thanks for coming to Itabini. I'm Jesse Van Taun, the CEO of the National Community Reinvestment Coalition. Thank you for addressing CRA in your remarks. You know, the Federal Reserve has long been concerned with, you know, sort of an economic recovery, this period of growth we've been in, not benefiting low-income workers to a great degree. And you connected the incredible rates of entrepreneurship happening, the importance of bank branches in these places. As you think about Community Reinvestment Act reform, you know, part of the issue is how do we motivate and encourage greater investments in rural places and underserved places in things like job creation. Would you support an expansion, particularly among the largest banks, of their CRA obligation? We have a moment in which, you know, we've cut corporate tax rates. Parts of our economy are doing very well. Parts of our population are doing very well, but a great many people are really being left behind. Do you think it's important to think about not just where investment happens under CRA, but expanding the overall volume of investment? Thank you.
So our focus, as you know, as an institution, we're very committed to CRA and to the goals of CRA. We do think that technology has changed, the world has changed a lot, and it's a good time. We've felt for some time that it was it was a good time to step back and look at reforming CRA, but in a way that enables us to better meet the goals of the statute, not worse. We're not looking to go in the wrong direction. The law hasn't been amended, and you know, so we're very much focused on continuing a focus on place and continuing a focus on the availability of credit, but taking into account all the changes that have come along. You know, and I think that it's important that institutions carry out those obligations strongly. We're not in the business of recommending legislation or taking a position on it, but I can tell you that we take our obligations under CRA very seriously, and as part of this reform process, we'll certainly you know, be working to achieve better delivery of under the law rather than weaker.
Mr. Chairman, thank you again so much for coming here. As we spoke earlier this morning, this is a very important moment, having been on the stage when Chairman Greenspan first said to the public that CRA is good business. I think your comments this morning will line up in that same hallmark. I want to ask a little bit about the advance notice for proposed rulemaking, in which there has been some conversation about looking at mortgage-backed securities and other asset-backed securities a little differently. As you know, it's really important to create that marketplace, especially in terms of dealing with entities like Capital One and others that are doing national business everywhere. Can you see a role for increased investment in national funds that serve the entire country as a means for getting more capital from fintech companies and Capital One and other entities that really service through the internet as opposed through traditional assessment branches? Can national funds be used as investment vehicles to help them meet their community reinvestment obligations and opportunities?
You know, that's exactly the kind of question that is in the discussions between the agencies and that we're trying to resolve. I'll just tell you, we're open to a lot of different ideas, but you know, and I think the other agencies feel the same way. They have to be consistent with and include a focus on place and a focus on you know, continuing that commitment that there be availability of credit within the district within the, you know, the area that the bank operates. So I wouldn't want to get too specific into your question, but that's our overall view. Thank you.
That's all? All right. So, again, thank you, Mr. Chairman.
Thank you. Thanks very much.